There are big things happening, and I want to talk about that, but not today. Most important, I want to talk about what we're looking at. My technical indicators that I've used, which really help a great deal, show that the stochastic, while it's pulling back, is still at 94%. The day is young. The week is still young because we were going to wait until 5 or 4 o'clock today to know about the weekly. And I had a question from one of our tigers. If we could look at the weekly charts, why are the weekly charts technicals weaker? Why do they take so long to improve? How do they? Why do they suffer so much damage in these? If you remember back in 2007 when I was talking about the weekly charts, and I still needed my extension in my monthly charts to go to that extra leg up, which I thought would be possible, leg F. We got that rally into that October period, and the weekly charts just made 2 peaks, and then they turned down sharply. I'll discuss that as we move on. So let me just run the numbers quickly, and then I'm ready to do what is very important today, and that is to go through the different technicals. The Dow's down 140 at 12,579. The comp index is down 37 at 2834. The S&P is down 18 at 1335. Gold is up 11 at 1542. I'm going to talk about that weekly chart that is still so strong, bumping up against the up channel, the long-term. Did I say it was a 2 or a 4 year? Multi-year up channel. We've got silver down 10 cents at 36.43, a dichotomy there, and that's not unusual because gold is currency of fear. You've got platinum down 8 at 17.33, and now the copper is given back 5.75. It's down at 4.38, but still acting really well overall. And you've got crude oil down 263 at 96.01, and you've got bonds up $1.50, $1.18 actually at 124.27. Now let's go into the technicals. Oh, I'm on Tiger TV. Haha, I don't know my number yet, but we're on Tiger TV. So this is what we're going to do. We're going to look at that weekly chart and say the MACD is still expanding on the Dow. The stochastic is holding at 94%. You are overbought by any means, and certainly the 120-minute chart, that shows it having gone to an unusual right arm extension leg G, pulling back sharply. And there again, even the 120-minute chart is still at 84% in the technicals, but the MACD has turned down, so that's very important to make a note of. What am I expecting? I'm expecting that the 12,530, maybe the 9-period exponential moving average at 12,471 has to be tested. But so far, based on other technical indicators, I still believe that we will be going higher in July after this pullback, this digestive pullback is completed. And I'll explain why in a moment. The weekly chart, let me go to that now because it is important. I'm moving this over now, and I've got my weekly chart. I've got all the notation there. I'm going to have to work out how to get rid of some of this notation. I suppose once I've done it, I've done it. I'm going to get rid of it now. Out. There you are, gone. There you are. In the weekly chart, and I'll expand this, what you can see is that the stochastic and MACD, while the stochastic has made a V-shaped formation, that's very important in my work, and the MACD is turned back up, they are both still very negative. The stochastic is still at 37%, and the MACD has not yet crossed positively, even with a stupendous move over the past week. And, well, it's 4 days, almost 4 days today for a shortened week. However, there is evidence having broken the down channel and having made a substantial left side, right side price correction that did not take out the 11,555 low of the 18th of March, having made a higher high, that we will be testing the 12,876s because the stochastic is turning up. There's nothing negative about it other than the price is at 37%. The shape is a V-shaped pattern, and that is good. He's young, as I say. Now, it's very important for this to sustain any move up for the MACD fast-moving average. That's this yellow line now, and I don't like V-shapes in the in the MACD, fast moving average. I like to have a curve, a sharp curve to the upside. It needs to cross the slow moving average. That's the yellow line, needs to go over the red line. What happens when you have a very sharp pullback in the daily chart, especially the one that we had from the 12,876 high, when there was a failure to confirm in the stochastic and the MACD the high of 12,876 in price, because the stochastic and MACD were lower than they were when the price was at 12,391 back in February of this year. So the stochastic and MACD had time to pull down. But you'll see that the histogram, these little bars which measure the differential between the yellow line and the red line, and that's also very important to note. Why? Because the MACD is made up of 1226 of the two moving average, exponential moving averages, and the yellow line is made up of those two moving averages to give you this 9-period differential. Now, even more important is that I want the on-balance volume, that green line that you see there, to start to move up nicely, and it hasn't yet confirmed that. So in the weekly chart, it takes longer to repair the damage. If you go to the monthly chart, and this is with all the charts, I'm choosing the Dow right now. I will go to any of the charts. Doesn't matter. They're all, they're all doing the same thing pretty much. You'll see that there is, having not gone into the wick of last month, the month of June, where we opened at 12,569.41, went fractionally higher to 12,569.49, 8 cents, makes a difference, and then plunged down to 11,862 and then closed beautifully at 12,414. You will see that the having gone higher, hopefully closing higher in July, will be very important to this particular pattern, and the 9-period moving average is at 12,114. The MACD is still absolutely beautifully strong. Stochastics at 92%, but it has pulled back, and the on-balance volume has given an inverted V-shaped pattern, so it's starting to pull back, and it's flattening out now. But the month of July has only just begun. We can't talk about it as if it's closed. Now, this is going to be very important. I'm going to run through some of the charts a little quicker, and this is what I'm going to do. You've got the S&P, SPX. I'm going to give parameters down in case we run out of time at the end. So the parameters I'm looking at for the Dow, the 12,520, 12,470 should be a very strong containment area. Even, I'm not sure it's even going to get there. I think a chunk of the move down has already been made. This S&P went from 1370 down to 1258 in the weekly chart. Here the stochastics at 32%, not as good as the Dow, which is at 37%. But the fast-moving average is moving up much quicker, and that is a good sign. The MACD is flattening out, and the histogram is actually moving up quicker. So that's very important. Major support is 1312, but on a very shorter-term basis, I would have to say that the S&P weekly, daily, which is in leg C, having almost certainly making a peak C today, that stochastic at 1325. That'll be major support at any pullback here. I will cover more of this because I think it's a really important day. I'll take your calls as well. We've got Dennis and Bradenton. We'll go into the S&P in greater detail straight after this break. We'll be back. In the meantime, I will show, for those of you looking on live TV, if I am live, I don't...
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin Burnstone Mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone Mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister Mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
You've heard Bud Rolfs give his expert technical analysis of the stock market on the radio. Now you can have his superior trading advice and his best stock picks delivered right to your desktop every week with his newsletter, The Torch. Using his own trademarked Warpath trading system, Bud will help you to increase your odds of making and saving money in the markets with powerful stock selection, stock analysis, and trading plan strategies. Published every Monday morning, each issue of The Torch features full-color charts in an easy-to-follow format. You will also receive not only the big picture of what's going on in the major markets and critical sectors, but also featured stock picks with complete trading plans and technical setups, as well as the Subscribers Corner, where Bud analyzes stocks submitted by subscribers. Visit TFNN.com today and receive your 2-week free trial of The Torch. That's a $75 value. Sign up now and make sure you receive all the great market analysis and winning trade ideas in every action-packed issue of The Torch from Bud Rolfs.
TFNN introduces Tiger TV. Tiger TV brings you video content to help you succeed in the financial markets and beyond. Investors and traders can get in-depth information, news, commentary, and education for investing and trading equities, options, commodities, forex, futures, and more. Just go to TFNN.com and click Tiger TV and select your favorite channel from the carousel on the left. Grab a popcorn and get ready for Tiger TV, a great new service from TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi everyone, we're back. Basil, Chapman, Dow down 130. S&P's down 17. I have the HGX, the Philadelphia Housing Sector Index, up right now. It is doing very nicely. For those of you new to my work, you'll see that I've got peaks here. I've got the peaks written. The housing index is, this is the weekly chart. You'll see in this, I'll just go back to this particular level here. It's made a peak A, B, C, D all the way to the April 10th high. Pulled back sharply. It's made another A, B, C, D. Then it went to EF, a very quick ENF. Look at the way the yellow line, fast moving average of the MACD, held above the 9-period. What a beautiful indicator. Look at the white line, the 9-period exponential moving average. Went underneath it. Now it is back over it on the weekly chart. If we can close out just even right here, we'll be above the 109.01 level. It's at 110.11 right now, and that'll be important on a weekly basis. Let's go to Dennis in Bradenton.
Yeah,
Bradenton. I think, did I say that correctly? Bradenton?
Yes, yes.
Yep, that's my wonderful engineer, Al, corrected me. How are you?
Good, good. Big tennis camp down here.
Oh, that's right. Oh, yeah. That's right.
But I appreciate everything you do. Just wanted to get your thoughts, Basil. Do you think that the S&P, not to be contradictory to what you're reading, but has a 5-month, huge head and shoulders both on a daily and even on a weekly basis?
Yeah, that's a fabulous question. Now let's just discuss that. Folks, I'm pulling this chart up here, and you can see a number of techniques that I've got right here on my S&P weekly chart. You will see in the weekly chart that the yellow line, This is the fast-moving average of the MACD, held absolutely spectacularly all the way through the up channel that went to a peak C at 1344. From the lowest low bar, all I do is I count each successively higher peak. The objective of the Chapman wave, my CD introducing the Chapman wave methodology discusses this in great detail, takes you to at least a peak D. Well, it went to peak D at 1370 on the week of the 6th of May. Then it pulled back to 1258, and it ran back up to the most recent high, that was yesterday, of 1356.48. Well, 1356.48, 58 is that? 1356 is a little bit higher than the 1344s on the left side back in February of this year. So now the standard head and shoulders pattern would be that you've got a shoulder on the left side, you pull back, then you run up, and that becomes the head, slightly higher or a little bit higher than the left side shoulder. That's at 1370. You pull back, you hold pretty much close to the low. In this case, 1249 was the low of March the 11th. Here we went back to 1258, a higher low. You run back up, and you stall round about the right side, on the right side, about the level of the left side, which in this case is just a little higher. Instead of 1344, it's at 1358. The principle involved here is that when you come back down, if you take out the low, in this case, I call it the left side arch low. It won't be 1258. It'll have to be 1249.05, the low of March the 18th. You can have a measured move from the top of the head, that's 1370, down to 1348.49. And that could give you a measured move to the downside. Where would that take you to? Why is it a dotted line, dashed line? Oh, that's the 200-period moving average. Now, I'm not sure why it ever turned into a dashed line. It should be a blue line. I like to keep things consistent. I don't know how that happened. Change that style. Give me 1 second, and I'll be right back again. I'm going to make it a little thicker, and I'm going to make it that bluish color. There you go. That's the line we're looking at. And that blue line is the 200-period moving average. Correct. Now, when I go to my weekly chart, I say, wait a minute. The monthly chart. The monthly chart has the stochastic at 92%. It is pulling back. The MACD is still expanding. It's still very good. The histogram shows that it's contracting a little bit between the rising red line, that's the slow-moving average, and the flattening, fast-moving average, but it's only flattening. It hasn't turned down yet. And the 9-period moving average is at 1294. So as I see it right now, my monthly chart is still very strong. So now to answer your question, if I was to say, if I was to see the, let's just go back to this chart here, 1312 level taken out in the next week and a half, I would have to at least say that that's implying this was an isolated single move to the upside in the weekly chart, regardless of what the Dow is doing, and that if it closes underneath 13, say call it 1310, absolutely I would say, yep, it could keep going down, but there's the potential there for a head and shoulders. But until that point, I don't see it. At this point, I still see strength.
Okay.
So I hope that answers you. You got other questions about it?
No, thank you, Basil.
Hi, folks. This is Tom O'Brien. To help you celebrate your trading independence during the month of July, we are offering you a unique opportunity to get all of the TFNN outstanding products at a substantial discount and to receive access to an exclusive webinar that you can only get with this offer. If you purchase Tiger Dollars during July, you will automatically be registered to attend my live webinar at no extra charge. During this one-day webinar, you'll spend 5 hours in the TFNN virtual classroom learning the 5 primary fundamental core techniques to become a master trader. The live one-day webinar, 5 primary fundamental core techniques to become a master trader, will be held on Monday, August 8th from 10 a.m. to 3 p.m. If you're unable to attend the live webinar, the course will be archived on your members page for you to view at your convenience. Outstanding TFNN products at substantial discounts with a free webinar. Now that's a great way to celebrate your trading independence. Go to the Tiger store and purchase your Tiger Dollars now.
Win free silver all summer long during our Great Panther Silver Summer Silver Giveaway.
Now we have our winner, William Lorman from Wilmington, Mass. William, thank you so much. Congratulations.
Hi, Tom. Thank you very much.
It's a beautiful thing, man.
Oh, we've got Jason Spears. Congratulations. You are the winner of the Great Panther Silver Giveaway here at TFNN. I'm so pleased you called in. Made my day.
Well, thank you. Thank you very much.
Through Labor Day, TFNN will hold a drawing once a day, 5 days a week, business days only. One lucky entrant will receive one of these beautiful coins.
Right now, we have our winner, Joe Picararo from Wakefield, Mass. Congratulations.
Oh, yeah. Hey, long-term fan. Listened a long time. So, yeah, big fan.
I know that voice, man. That's a beautiful thing. That's a beautiful thing, man.
Winning one of these extraordinary coins could not be easier. There's no contest and no gimmicks. Go to the front page of TFNN.com for more information. Win free silver all summer long during our Great Panther Silver Summer Silver Giveaway.
Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin Burnstone Mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Rand Basin in the last 30 years. The Burnstone Mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister Mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Purchase Tiger Dollars in the month of July. Order the opening call and receive access to Tom O'Brien's exclusive one-day live webinar, 5 primary core techniques to become a master trader.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. Dow's down 142. S&P's down 18. And we're going to go to our next caller. We've got Freeman in Dallas. Hi, Freeman. How are you?
Hey, Basil. How are you doing today?
Very well, thank you.
Hey, Basil, I got into EDZ into the clause yesterday. And I'm
very good.
But the problem is I have 2 times my normal position there. So I'm thinking, my question is, would you hold this overnight? Because I was looking for a quick, which happened. But would you hold this over the weekend?
Okay, folks, we're looking at the EDZ, which is actually 200% short the emerging market index. The iShares MSCI emerging market index right now, which is the long side, which is really the root, is at 47.56, down 92. Now, I do not have a sell signal on this. I've got peak A, peak B. What I needed to discuss in the previous segments, and I did not, is that when you are underneath a previous major high, and in this case it would be around about the 50.43 high in the EEM, all of these rallies, even the Dow and the S&P, that has to be called a counter-trend rally, except for the Qs and the IYT, the transports, which have gone to new highs. I'm going to do this. Now, this is tough for me to do because the day is not finished. Anything can happen. Believe me, let me just see. Are we making lower lows in the E-minis? Just real quickly. Yes, we've made slightly lower lows in the E-minis. All right. Are we making lower lows in the Dow, INDU, in the 120-minute chart? Not yet. Okay. If we take out the low on the Dow of 12,567 in the next 2 to 3 hours, I would say to you, hold it through the weekend. And you can hold both positions through the weekend. As it is, I suspect that we need at least, because in most of these, let me just double check. No, the Dow would have pulled back immediately. Only the futures went to slightly higher highs. And that's fascinating because the ESU, that is the E-mini, went to a higher high, which means that this is still leg D in the E-mini. Although it's leg D, that says that the next lower high bar gives you a peak D, and a peak D in the Chapman wave, as you can see in the, for those of you looking at my chart in Channel 1 on Tiger TV, you'll see that back on the 6th of April, that peak D, 4 peaks higher, gave you the biggest pullback. So what I would say to you is this. My preference would be to have been short. For those of you who went short, I know Dave, I believe Dave mentioned that he had gone short at the close yesterday. That was fantastic timing. I personally would be looking to cover part of that position if we rally from here and the Dow gets to a minus 93 to a minus 86 by 120, and then doesn't by 220, does not go down to minus 135, I would be covering some part of my position, even though there could still be further selling off early next week. That's just me. However, on my EEM, the MACD is very strong and the stochastics at 90%. That would say that this has to drop probably to 46.21, the 200-period moving average, which has just been fantastic support for the EEM over the coming 2 days after that, for the stochastic to really dive down into the 80 to, say, 77% area. Probably, yeah, it would. If it went down that far, it would definitely go to about 76, 77%. So that's just my position. If you're asking me about the EEM, what I'm looking at going further, I did a little work on this. In fact, early this morning, I did see some charts go up, and one chart that I wanted to look at, which I had sent to subscribers this morning of my opening call, because I had a question about it from one of my master traders about it, and I will look at it because it's been one of the best stocks on the market. CMG is the symbol. I wanted to show certain things, but my weekly chart here says that the stochastic is holding okay. You know, that's the recommendation. You know what I'm going to do? Hold on through the break. I'll give you a quick summary as we get back, okay? We'll be right back.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks. Purchase a Tiger Trading Track subscription now through July 15th using your Tiger dollars and receive a total of 15 trading courses for only $500. These courses would cost $2,200 if purchased individually. You will have access to all these outstanding classes for a full year. The topics include moving averages, primary trading ranges, Fibonacci, confluence, astro harmonics, money management, option trading strategies, and many more. You must order before July 15th to take advantage of this great education. As an added bonus, you will also receive Tom O'Brien's live one-day webinar, 5 primary techniques to become a master trader. The live webinar will be held August 8th from 10 a.m. till 3 p.m. It will also be archived on your members page to view at your convenience. Go to the front page of TFNN.com and order your Tiger Trading Track subscription now. Remember, this offer is only available until July 15th, a $2,000 value for $500 with an exclusion 5-hour webinar with Tom O'Brien. That's a great trade. Go to the front page of TFNN.com now and order.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, I just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, did you sell us jewelry, or did you buy coins off us?
Yeah, I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you know, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
TFNN introduces Tiger TV. Tiger TV brings you video content to help you succeed in the financial markets and beyond. Investors and traders can get in-depth information, news, commentary, and education for investing and trading equities, options, commodities, forex, futures, and more. Just go to TFNN.com and click Tiger TV and select your favorite channel from the carousel on the left. Grab a popcorn and get ready for Tiger TV, a great new service from TFNN.com.
Hi, folks. This is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is for sale at Amazon.com for only $18.40.
Hi, everyone. We are back. This is Basil Chapman. This is the Tiger Technicians Hour, and I am live on Tiger TV. I'm thrilled about that. And we're on right now with Freeman in Dallas, and we are looking at the EDZ, which is, in fact, EDZ, which is, in fact, the 3 times bear. I'm going to make a suggestion.
Yes.
I would grab profits on one of your positions.
Okay.
The EDZ right now is at 1725. The stochastic is just turning up in the daily chart. The MACD is still flattening out. But this is a real quick move, and it's leg A. It's bumped into the 9-period moving average and pulled back right exactly on the line. At 1750 was the high, and 1754 is the 9-period exponential moving average. So what I would do is this. It's at 1728. I would say at 17, sorry, if you wanted to go up. Yeah, I'd make a stop on one part of your position because we're at 11:45 Eastern time right now. In the next hour, if the Dow cannot get back to like a minus 92 to minus 88, S&P minus 13.10 to minus 12.80, then you're in the exact right position. So maybe put a stop on one of your positions at about, it's at 1728, make it at 1706 on one position. Okay. And if over the period of the day, if you get taken out on that position, you can still hold the other position, because even if there was something really good to happen over the weekend or whatever, I think I don't think it'll go to the low of the day immediately on Monday. I think you're still in the right position, at least in the short term. But my EEM is saying that there's a good chance that if the market stabilizes, the EEM is going to move back, and it will make leg C over 48.63 sometime next week. Now, I'll be completely wrong if it takes out the low of 46.75. So I hope that helps you. One position, make it a kind of a tight stop. The other position, I'd think of getting out of it if the Dow comes back really strongly by the end of the day. But otherwise, you can hold it if we go towards the low of the day into the close. Hope that helps you.
It does.
Thank you very much. Let's go to Charlie in Cohasset. Hi, Charlie. How are you?
Hi, Basil. How are you?
I'm very well, thank you.
On this rainy day.
Yeah, it's raining, and I hope it clears up because I'm supposed to play tennis later today.
Yeah. So
all
anyways,
right. You'd like to look at?
Delta Airlines?
Delta Airlines, DAL is the symbol. It's at 9.25. It is down only 16 cents. Now, you're in this position, and you're looking to build it further. Is that correct?
Yeah, I got in there about 9:20.
Yeah, I think you got around about this level, and that was about a month ago, right?
Right, yeah.
Now, for you, I would say, I know that you're building a position, but at the airlines, this is a tough chart because it pulled back so sharply. So I would just say to you that if it closed underneath $8.99 was the low on the 15th, the week of the 15th of April. If it closed under $8.85, I would just be out of that position. That's mine. Now, what you really want to see is that over the coming week, it does not take out the low of this week of 9.01. Instead, it climbs to 9.73, just over the 9-period moving average. As soon as it does that, then the wick, the candle wick of the 24th of June, going to $10.13, that's your target. Those are my parameters. I know that you like to build them slowly, but I would just say to you, my personal opinion is if it closes under about $8.85, I'd probably look to restart at some other time. Hope that helps you, Charlie. Thank you so much for calling. Thanks. Let's go to Alan in Largo. Hi, Alan.
Hey, Basil. I have two questions.
Yes.
First question actually was generated because I just saw you on Tiger TV for the first time.
Oh, great.
And it really looks good. I use TradeStation like you do, and I'm just curious on the stochastics, on the smoothing. Are you using Type 1 or Type 2?
I only use the slow stochastic. I never use the fast. I use 14, 3, 3, 1, and 20% and 80%. So I hope that helps you. That's the only one I use. The other's just too quick. I love this, and I've experimented for many years. For a long time now, this is what I stick with.
Okay, so it's smoothing Type 1 was what you said. Okay, I wanted to ask you about IWM. You had it you have it on the chart now, I guess. So
I have right now. Now, what we're looking, folks, is IWM is the iShares Russell 2000 Index. Do you have a position in this?
Shorted it on the open this morning.
Oh. If you had said to me you shorted it sometime yesterday, I'd say that's fine. I have this as peak G in my 120-minute chart, and it's underneath the 9-period moving average for the first time. Folks, if you want to use moving averages, do my course, the moving average course. It's just, use your Tiger dollars for at least one of the courses. Try to take that one. Look at the 9-period moving average in the 120-minute chart, how it would have kept you in position. Look how in the daily chart, it is still way above the 9-period exponential moving average, and it's made a peak C. This is a pattern that I call a Chapman wave cup and ladle. It's a very special. It's only pertinent to my particular technique, and it is a pattern that says not only do you take out the left side high, which in this case was the high of $84.86 made back on the 31st of May, not only do you take it out in a beautiful left side, right side price time match. In my CD introducing the Chapman wave methodology, I talk about these inside wedges. It's a particular technique. It's called the Chapman wave inside wedge. And then I also talk about using the left side, right side cup and ladle. The way it broke out, normally you would go to at least a peak D and then come back, and then if you don't fill in the gap, fill in the cup, go back into the 84, 86 level, that's very positive. But normally you would go to a D. We've made a peak C with today's action at 85.97 yesterday. I'm anticipating, based on the stochastic and the MACD, look how beautiful. Look, you can see if you're looking at my chart, look at the stochastic. When the stochastic failed, you went to a peak E back on the 6th of April, you pulled back. There was this rogue wave. It's called a right arm extension, another technique that I teach. You only went up momentarily with the stochastic, and then you pull back down, peak F, 86.81, pull back for the sharpest decline right down to the doji candle. What did we use as a support level? 200-period exponential moving average. You see that blue line there? So now we've gone to a peak C. Everything about this says there should, and I say should, there's no guarantee. Hold on, because I'd like to just finish this thought. We should, in the IWM, make a new recovery high. Hold on, we'll be right back with Alan and Largo straight after this. Dow's down 110.
Put the power of the Chapman wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman wave methodology for several years now. His Chapman wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today. some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make.
Tom O'Brien's weekly newsletter, The Gold Report, gives traders, investors, and money managers a thorough strategy for trading in the gold market. If you're an investor in gold or any of the gold mining equities, this newsletter is an essential tool that can help you become a better trader in the gold market. The Gold Report comes out every Monday with complete coverage of the entire gold market, including the XAU, HUI, the dollar, the bond, the rand, as well as more than 35 different mining equities. For the low price of $150, you will receive 13 weeks of the Gold Report, or you can order up to a full year for under $500. If you'd like to find out more about the Gold Report, log on to tfnn.com, or for more information, call our office at 877-518-9190. That's 877-518-9190.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with the remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
Hi folks, this is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is for sale at Amazon.com for only $18.40.
Hi folks, we're coming to the very shortest section here, and we've got Alan and Largo. We're talking about the IWM. So Alan, this is what I'd be looking at. If you were short, I'd say, okay, stay short right now. But you've got to be very careful that IWM, by the end of the day, does not get above 80. It's at 84.73. If it gets above 84.99, 85.03, I wouldn't say to you necessarily get out of the trade, but I'd tighten up my stop a lot. That's number one. Number two is
I don't disagree with you. I think long term is going up. I'm just looking at short.
Today, we should be down 183 to 225 points right now with all the bad news. I believe we've got a rotational market, and this rotational market is saying that there are enough stocks like Merck that I just showed in my Tiger TV right now that are holding up nicely, doing very well. So I would say I'm wrong about IWM if in the next week it closes under 83.31 to 82.60 for more than 2 days. If it goes under that for more than 2 days, I'm wrong, and we're probably going to stall out here longer than I think. Hope that helps you.
On the slow stochastic, on the daily, it turned over today.
Now, the slow stochastics turned down, but it's still at 95%. That is fantastically strong. Anything over 80% is good. The book says it's called overbought. We're going to learn, now that folks can see my Tiger TV, folks will learn just how beautiful that the stochastic can be as an indicator. So I got to run. Thank you very much for calling. Call again.
Bye.
Okay, folks, a couple of things I wanted to do. I wanted to show, actually, I wanted to talk about CMG. I sent it out. I had a question from one of my Master Trader series folks about it, and I did a very detailed study of it as a study piece. We've got no position in it. I'll get to that, but first I wanted to show the long-term chart of gold. Gold from November of 2008 has been in a beautiful up channel, making these peak E's, peak F's, etc. It went to a peak F most recently, and it's touching what I call the inside track resistance at the GLD at 150.39. It is holding really well in this up channel because I think it's a currency of fear. Meanwhile, the dollar is stalled, and even now it isn't able to get going. The UUP is up 0.08. I'll show these charts over a period of time. You get used to seeing them. I'm just going to quickly jump. I talked about the Dow, the support and everything. I just wanted to talk about CMG because I only wanted to show the stochastic. There's no position or anything. But CMG, which is Chipotle Mexican Grill, never been there, is at a peak B, as I read it, with a stochastic at 97%. And that was the question that my master traders, what's going on in the 120-minute chart, which I have at a peak F or D in an alternate wave. It's under the 9 EMA. But it is holding really well. It's down 4 at 324. What I said is if this is peak B, between 322 and 317, somewhere around there, is probably a good place to nibble at it because there should be a leg C to come. I wanted to show that because I wanted to show that as part of all the different techniques that you use. Look at this beautiful up channel that has been in the weekly chart. Look at the monthly chart, how the resistance line, it's right at that. Is it getting overbought? Yep, it is. But the tactical state, it could still go higher. And that's all I wanted to say, that using these technical tools can really help you. And so let's go back to the Dow. I have the Dow. We are still long the Dow from 12,025 in my opening call. I think this is a peak B. We should still go higher to a peak C and then a peak D in this move. We should get over 12,753.89 sometime next week if I'm correct. Where does it fail? If it goes underneath 12,450 in the next 2 days and holds there for more than 2 days. Thanks for being here. Nico DeHaan coming up. Tom O'Brien, a fantastic show with Tom this afternoon as well. I'll be back on Monday. My opening call, you'll see these charts in my opening call discussed in great detail. And go to the front page of TFN and sign up for all these different things. A beautiful month to do that. Have a great weekend. I'll be back Monday.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.